Kaylin, tell me what it means when someone says they want multiple streams of income. Tell the people. Why do the people need multiple streams of income?
COVID says it all. What's the difference between having an LLC for your business and being trademarked?
For me, I'm trying to get multiple streams of income because I'm trying to retire early. 62, can't do it.
What's going on, y'all? Welcome to another episode on the Stream Chasers podcast. You got myself, Kaylin.
I'm Candace.
And we're glad that you're here with us on another great episode. You know how we typically like to start things. We got to tag up. It's not a Stream Chaser show unless we do a quick tag up with each other. So, Candace, what's been going on these last couple of weeks?
Oh, boy. So, the last 2 weeks, let's see. So I'm going back to work. Full time, meaning back to the office. So I've been back at work, but I'm going back to the office now. So I'm preparing to go back to the office. We're doing an office move at the same time that we're bringing everybody back to the office. So
to a whole new location or just a different office in the building?
Just a different office in the building. So they're rearranging folks because we've done an office reorg before COVID hit. So I guess they're trying to put people where they belong with the teams that they belong with on the floor. It's stressful. One thing that people are attached to is like their workspace.
Yeah.
So like having to deal with people that already don't want to come back to the office and then moving their office location is stressful.
So that's funny that you say that because I'm one of those people in my office. I don't have family pictures.
Oh,
and
okay.
People always like to be like, well, do you have a family? Because you be taking off leave to say you're doing things with your family. I don't see no family pictures. But it's because of that. Because like I hate if I do have to move, I got to do all that unpacking. Boxing. So it's like when it's time for me to go, I'm out.
Grab my laptop and I'm out. Right. No, and I've got people who've been in the same like space for like 10, 12 years. So like they got a lot of stuff in that space that they need to move around. And then on top of that, they had the nerve to add a new employee evaluation system at the same time. Sis been stressed. So that's how my last 2 weeks has been. So it's been really dedicated to my FTJ. And then I actually took the leap and spent $300. So it's going to be $4,000 overall on an advertising budget for my side business for Pretty Prince. Advertising with theknot.com because, you know, the Knot is the biggest source of like wedding.
I'm sorry, what's that?
The Knot.
Oh, theknot.com.
Yeah, wedding because you're tying the knot, right? So theknot.com. So I think they said they have something like 13 million unique visitors a month. And so it's worth the hit, but I knew it was going to be expensive. And it's not super expensive, but I think, I don't know what stopped me from investing that kind of money and energy into my business prior to now, but I think at this point I'm just ready. So I've been spending a lot of time getting the storefront profile that you have on that page together. How about you?
So I think our last guest that we had, we had Kim on talking about which was real estate investment, but we got into more of the personal finances and things. Yes. And he mentioned, you want to know the quickest way to get your finances in order is to put all the bills on auto pay. Because that will literally hold you to a strict budget. So what I did was when I set the bills up for this month.
Did you put them on auto pay?
Almost all of them. And so I was surprised because remember on the episode I said, probably only got like 3 bills. When I really started going through it, I already had about like 8 of them
on auto pay.
I just never really paid attention to it. But I've literally put the big bills also on auto pay. I think maybe just like 2 that I have like pending. So kind of taking that seriously. Because I have some other goals, business goals that I'm trying to hit.
I'm proud. So I talked about it with Anthony, right? So we talked about the auto pay thing. And he was like, it makes sense. And I was like, yeah. He was like, yeah, nah. I was like, okay, we'll get there though. And it's crazy because I definitely just got pinged by American Express this morning. Was like, hey sis, don't forget we're today. And if they hadn't sent me that text, I would have forgot. To Kim's point about putting the things on auto pay because I've been so busy with other things. So it's like, I mean, I'm proud. I'm clapping it up for you.
Like I said, and because the thing is, I pay the bills are getting paid anyway. So it's like if I can just go ahead and get those on auto pay, so I don't have to worry about that at all. Just gives me a little piece of freedom in my mind. So that's something that I taking on, and of course, like always, the business stuff.
Yeah.
Trying to make sure we got good content for the listeners. Getting good guests to come in here.
Right.
So, just the normal.
I am proud.
Just the
I'm
normal.
stunned and proud all at the same time because you had such a big reaction to that auto pay thing.
I mean, yeah, because it's a scary thing, but it's like, but at the same time, it's just really like being disciplined. Like,
okay, let's
just do it because, like I said, I got some other goals that I'm trying to hit.
Okay, do the work.
Yep, do the work. But with that being said, so we mentioned Kim. So again, a week or two ago, we had Kim come in and talk about like real estate investing on a personal level, by yourself, acquiring your first home, or even if you wanted to get into or becoming a real estate agent yourself.
Right.
So today it's another layer or level to that, we can say. So today we have a great topic that we're going to present to you all, and it's real estate investing. But it's more so at a group level. Okay. Because a lot of people come in and it's like, yeah, I see these multifamily homes, or I see this single family and it's $500K, or even if you get a great price, it might be like $50K or $80K or something like that. If it's one of those properties in Baltimore that need a lot of work or whatever.
Right.
But then it's like, but they say you need 20% down when it's an investment property. Right. So it's like, how do I actually do that?
And I ain't got it.
By myself. Yeah. So the group we have today, they do it on like a larger scale with a group of investors.
Okay.
So where you have to meet certain qualifications to get in on these deals. Okay. I believe they're called syndication deals, but don't quote me on that. We're going to get all the nitty gritty details of this.
Okay.
So that's what we have for you all today, Stream Chasers. And before we get into that, first I'd like to make the introduction to our guest today. Is two black women today that we have that are doing major things in this industry, and that's Miss Pam Dorsey and Miss Nikki Dade.
Yes.
And we're glad to have you on our episode.
Thank you for having us.
Thank you. So before we get started and like diving into the industry, can you all just kind of give us a little background about yourself and how did you two actually come together to want to start Paragon, investing?
Okay. I'm Pam Dorsey, and we started Paragon Investment Partners in January of 2018.
Oh, okay.
And Nikki and I actually are related by marriage, and we've known each other for close to 30 years, 25 years, something like that. And so we would often come together at family events, and we'd be huddled in the corner talking and sharing ideas. And we both are entrepreneurs. We have other businesses as well. And I've owned real estate in the past, single family residential rentals, and Nikki's owned, and she's a real estate agent. And so we kept coming back to real estate. Our like interests kept bringing us back to real estate, even though we had separate businesses. And one day we were like, what are we doing? Like, we keep circling the fence on this. And it, naturally keeps coming back to this. So we have to, let's get together one weekend, let's brainstorm, let's put it all on paper. And we just kind of threw it all out on the table, and Paragon Investment Partners was born.
I love it. I love it.
That's good, because you literally did, you had a plan, but you actually put the action in place. Because, a lot of people, and I can attest to this, a lot of people will have these big grandiose plans or something, very minor, but it's like, it always sounds good. People talk a good game, but then it always stalls when people's like, so hit me up next week, and then that plan just falls to the wayside. Yeah. But it's like that's a huge thing to actually put the action in place.
I think I can also say that we each tried things on our own.
Okay.
And we came to the decision that it's much better to leverage each other's talents. And so there are things that she is naturally great at that I shy away from, and vice versa. And so what we've been able to do is complement each other's talents, and that leverages our business and makes it much better together.
Yeah, for sure.
Got you. So I'm just curious, what's some of the things that, that you're great at that, that Pam might not be so.
I'm the talker.
Okay.
Okay.
So that's great.
Yeah, I'm the talker. I'm totally open to making connections.
Okay.
Pam is the one that's going to sit back and kind of watch out and fill out. I'm just going to go out there and see what it is.
Yeah.
Not afraid to do that ever. I'm a visionary. I have the ideas, but she executes.
Okay.
And I bring her back to earth.
Come on, you need one.
I dream.
You need one. Yes.
You're the dream big.
Okay, you
I'm
need
that
it.
one.
But that's the good balance.
Yes.
Exactly. Zen and that. It's all good though. So yeah. So I'm always out there on the forefront, getting connections, making the connections that we need, talking to the people, bringing the people that we need. I'm extremely resourceful. Extremely and relentless on my approach.
Yeah.
I won't stop. She calls me a barracuda.
She's a stalker.
I'm a stalker.
I'll take it all the way back to your opening about auto pay.
Oh yeah.
Oh, I hate it.
I'm an auto pay.
Oh, you are another.
And
She is like when you said it, we looked at each other.
Yeah. Okay.
I'm a planner. I'm an organizer. I'm an operations person.
And I'm a free spirit.
And she's a free spirit.
Yeah,
Okay.
just living.
Yeah,
I like it.
I'm a graduate of Howard University, concentration in acting, so I'm free.
Oh yeah. Okay.
Yeah.
She reminds
As a
me
bird.
of Chase.
Oh, your
This
daughter
is my
Chase?
this is Chase, and I am Pam, and so I be looking at Chase like, what are we gonna do with this? This is gonna be a lot. So
Right.
oh
But
my
within
goodness.
me, so
Yes.
within me.
Yes. Okay. All right. I love it.
Yeah. So but like I like to go ahead and start diving into the industry. So can you all just kind of set the tone and kind of explain how your real estate investing is different from the traditional approach of investing? Because like most people think of investments like how I said in the opener of I see this townhouse that I want to go after. What's going on, Mickey? Like let's get a real estate agent. Let's go after it. I know you all's process and approach is a lot different from just a single person going after investments. So can you kind of set the stage for that?
I would say that when we started the business, we spent the first year pretty much educating ourselves on, what you needed to know to be an investor and to use other people's money. And so it's one thing for us as individuals to seek out investment opportunities. It's a completely other thing for you to ask people to put their money into, trust you with their resources to be able to invest. And so we wanted to be really straightforward and educate ourselves initially to know exactly what we're doing, what we're stepping into, be able to speak the language, have
The
people
jargon is important.
Yeah, have people feel comfortable about partnering with us because that's what you're basically doing. We also knew early on that we wanted to go into multifamily investing as opposed to like wholesales or fix and flips and those kinds of things.
Okay.
And so what we learned is that it's better to leverage group economics than single investor resources. And so that's how we got into the multifamily and I don't want to call it crowdsourcing, but it's really crowdsourcing. Nikki can go into greater detail about the whole syndication, but you can anything over 5 units is considered multifamily.
Okay.
And, so,
And commercial.
and you can start small, and we kind of had our sights set on smaller, like 10, 15.
We thought we were going to build it brick by brick.
Yeah,
Right.
20
We really
units.
did.
And when we got connected to our mentor, which we can talk about later, he's like, "You guys are thinking way too small.
Way too small.
Don't come to me to talk about partnering and leveraging unless it's 100 units or more."
Yeah, and we were like, well, what? What you mean? We were like, well, maybe 20.
Yeah.
He's like,
no.
And that's crazy because when you said starting off small at 10 to 15, I'm thinking that's big.
Yeah.
I'm
That's
thinking
what we
that's
thought.
That's where we were playing in the
Yeah.
first year when we were learning and adapting and talking to people and telling what our sweet spot is, so to speak. That's where we were. And he's like, "You're playing too small. You got to come big with it."
Now, is that was prior to you having purchased the property? This was just you educating yourselves, and that's where you thought you were going to be, or had you already started to invest in those small 5, 10 situations? Oh, so this is prior to you actually doing it. Okay.
Yeah.
And so then he said, dream bigger.
Yeah.
Okay. All right.
Oh, bye-bye.
Yeah, or bye-bye.
Or not entertaining you.
And point blank, we were like, okay, so I guess we better go back to the drawing board and kind of get this together, because we had gone through, well, let's just talk about the mentorship thing.
Okay.
Well, let's take it a step back first.
Okay.
Because before we go there, in that first year while we were educating ourselves, I know you've heard people talk about analysis paralysis and thinking too long and overthinking it.
Yeah.
That's me too. So the three of us are.
In that first year, it got to be close to the end of the year, and we had set goals for ourselves, and we had established that we were going to have 100 units by the end of the first year.
Oh, wow.
And so it got to be September, and we had not purchased anything. We didn't even have anything close to being purchased. And then we, our property manager that we were dealing with, we went to a meetup, and we met a property manager from Baltimore, and we told him what we were looking for, and he presented us with an opportunity for a duplex in Baltimore. And we were like, okay, it's not commercial, it's not the traditional multifamily, but we got to cut our teeth. Let's go out
we're
here.
Experiential learners.
And let's do this. Let's do this deal and get it done. So we did that, closed in October.
Oh, but let's talk about how we did it. It beat us up.
Okay.
Badly.
But good.
Yeah.
But good. I've learned. Yes, that beating. Sometimes the beating is okay.
Exactly. And from that, that's when we pivoted into. We were like, we're not gonna go through that anymore.
Okay. In terms of putting your own money up.
Yeah. See, that's what I'm saying. See, that project was self-funded. We sourced the deal. We went out. We got the financing. And oh Lord, let's talk about the financing. We actually had to fire our loan officer. Okay. Because we had spent the time preparing, educating ourselves, preparing our credit, making sure we were in the right position to do what needed to be done.
So you don't get no rejections. Yeah.
Right. Exactly. And got to the 11th hour and couldn't get a loan.
Oh no.
What the heck is going on here? Yeah. Well, the problem was we didn't have the right fit with our loan officer, so we had to fire him. He thought he knew more than he did. I'm gonna be nice.
And you all were probably having to pay.
It was a lot, so we had to actually get a hard money lender at the 11th hour to actually close the deal.
Can you explain what a hard money lender is?
That's basically people that actually lend their funds so that you can actually purchase the acquisition, right? So you're going to have to pay a little bit more for it, right? It's not conventional lending. Okay. It's basically like private money lending.
So you're going to
essentially
a neighbor or somebody down the street that just got some bank.
$50K or what? But some people actually do it like companies.
Companies.
Right, but it's not your Bank of America, your Wells Fargo.
No, it's very non-conventional lending. The interest rates are really high. I mean, you have points and things that are it's astronomical.
And it's meant to be a bridge temporary to get loan. You. Exactly. It's very temporary. 6 months is what all we needed.
Yeah,
exactly. To be. And so for us, this is how I look at financing. It's a temporary layover, right? It's just a means to get into what you're trying to do. So we were like, okay, we're gonna go ahead and do this. And as soon as we closed the next day, we were on the phone with Eastern Savings Bank. Creating that relationship, and so we were able to secure permanent financing for that project. So we came right out. We didn't have to do any seasoning. Okay. We didn't have to hold in a loan for that. So once we pushed the rents and did what we needed to do, we were able to reposition the property so that we can kind of get out of that loan now and secure permanent financing at a much lower interest rate. And then we were able to get them to come on as our partner now. So now we have an established relationship with them. So we have other projects that we can work on. Now we can go and work with them on it too. Like with the vice president. That's the relationship that we have. No, seriously. Because with the small banks, that's how it is. You can have a relationship that's that intimate. And we still have the relationship with him now. And he's actually with another bank where we can call him up and say, hey,
I'm interested in this. What's up?
We have a project.
Yeah.
What
you girls got going on?
They became a meetup sponsor for us. And they came and presented. And so it's a long-standing relationship. And in this business, it's all about relationships.
It's all about relationships.
Interesting. Okay.
And so we refinanced into that. But we got our butt beat on that. But we decided from that project that we were going to make sure that we were positioned in a way so that when we started to work in this space, we had everything we needed. So we hired an advisory team.
Okay.
We believe in paying up front.
Yeah.
Because you're either going to pay now
or pay later
with mistakes.
Yeah.
Yes.
Yeah.
It's one or the other. So we're like, okay, you got to pay to play, and we still have to pay to play.
Got to spend money to make
That's the
money.
name of the game.
Make
You
money.
gotta spend some money.
That's what we were just talking about.
And so we just started putting everybody in place. You know, our SEC attorney, which is a securities exchange attorney. So when you do these larger deals, because you're dealing, it's a totally different space. You have to have a different attorney for that. Lenders, brokers. We actually have people in place now that can sponsor our loan, that can guarantee our loan, because we knew we didn't have the network and liquidity. Right. But you can put people in place on your team with these type of deals that do have that.
Okay.
That's the beauty of playing in this space. That's what we didn't know when we first started out. That's what we learned.
Leverage other people's experience and net worth.
Gotcha.
And that's how you get into the bigger deals.
Exactly.
Gotcha.
It's important to partner.
So I got many questions just from that.
Go ahead.
But my first question is, so in September, did you make your goal by the end of that December?
Oh, let's talk about them goals, girl.
We did. We were able to
We superseded those goals.
so
Wow.
Because I wasn't seeing it. I was like,
Okay.
Yeah, let's hear this story.
So the other thing we figured out is that in order to play in this space, you have to get out of local. We needed to be on a national level. So we identified conferences that we were going to attend.
National events.
Real estate investing conferences that were, national in size. We quickly figured out that these were sales pitchy events where everybody's trying to sell something.
Okay.
Right.
And we were in the room with several hundred people, and it was almost like a cult kind of thing. They were,
one of those type of
everybody
events.
who went up was selling something.
Yeah.
And we looked at each other. We were like, we're not sitting through this all day.
Yeah.
So we went and set ourselves up out in the lobby, in the breakout area, at a table with our business cards.
Like y'all were the vendors.
Like we were a vendor.
And it worked.
And people were coming to, well, what are you ladies up to? And where are you looking to invest? And so we spent the day
networking
and connecting.
Come on, that's what I'm talking about.
Yeah, that's thinking.
Because I would have went home. Yeah, I would have went home and like, this not for me.
Just
Been
picked
at
up
the
the
hotel.
money.
Yeah, I guess so.
We also had come prepared with a credibility book.
Okay.
And so
we went there. I just want to interject real quick to find someone that could sponsor our deals.
Okay.
So that
we
was
had
the
a goal
goal
in mind
Yeah.
to identify.
So when you say sponsor your deals, what type, like a financial sponsor or like what type of sponsor?
Go ahead. You want to?
That's the high net worth person that will sign on a deal.
Okay.
Yeah.
That's the guarantor.
That's the guarantor. And has the liquidity to be able to help you get into the bigger deals, and has the portfolio and has the experience, so that if they're on your team and they're in your credibility package, when you go to a lender to say, I want to get into this deal, this is my team, you have these key principals or key sponsors on your team with the liquidity and the high net worth and the portfolio that you can leverage.
So they're going to bankroll you based on who you see on your team. Like, oh, I know him. Got it.
Exactly.
Which is how
And
you
that's what you
got
can.
investors to start investing on some of your deals, because that was my question. Because it's like starting off with no properties, how are you getting somebody to invest money to trust you, but you building out this team and you got that sponsor to like, we're stamped.
We have a wonderful mentor that believes in us. We are so grateful and appreciative, deeply appreciative. And I'll just say his name because I just love him so much. Daniel Woodford with Mission Bay. And the thing is, we were introduced to him by our attorney. We were in her program. That's how we found out about. Exactly. She's a woman. She presented at our meetup too. She introduced us to him because she knew what markets we were looking to play in.
Okay.
And we had done the work and we were prepared. See, I don't believe in luck. I believe it's being prepared for the opportunity when it presents itself.
Right.
There's no luck. You gotta prepare, right? And so she knew that we were prepared to do that. So she made the introduction. That's how we met him.
At that conference.
At that conference.
We saw her in the trade room where she had a booth, and she's like, I have someone that you guys need to meet. I've already told him about you. I want you all to come together, have a conversation. And when we met him and presented him with the book, he was a little
That's when he said, That's it.
the 20 to 50 units.
Okay.
He's like, oh, you're thinking way too small.
Yeah.
Okay.
And we came home from that event, and we had met a lot of people. We had a lot of numbers, a lot of connections to put into our database to follow up with, so that when you start doing deals, you need to know people who want to invest with you. The Barracuda started her stock game.
Yes.
And so
Click, click.
within a couple weeks, because he said we should follow up. He was from the
He gave me
DC.
an open.
He was
So
from the
the
DC
area.
Yeah, he's from Northern Virginia.
Okay.
He was, former Pentagon, former military,
Got
and
it.
was now transitioning, had retired from military and was investing. And so he left the door open.
He said he wanted to see our underwriting. That's important in this game.
Yeah. And so Nikki stalked him until we got a lunch date with him. And we came, again, it's all about preparation, came to the meeting with a deal that we had underwritten.
Okay.
It came to us by way of a wholesaler, but we went around the wholesaler and was able to get connected directly to the seller.
Can you explain what you mean by when you say you came with a deal that you all underwritten?
Okay.
Because, I know when I hear underwriters, I think of, the underwriters from the bank when they... when your potential loan application.
That's exactly what it is.
So that's what it is.
That's
but
exactly
you all,
what it is.
you
But
all,
you do it on your own,
Oh,
right?
wow.
Yeah.
He said,
y'all working.
But that's what we had to learn. That's what we paid for the program for.
Okay.
So that it's basically the due diligence process, figuring out what the numbers are, if it's a valuable deal, right? And you have to lay out all of those numbers, what the
Right.
potential is, what you're going to do with it, where's the opportunity.
How much you need from investors, what their return is going to be, what the hold period is going to be, because they're going to want to know, if I give you my money, how long are you going to keep it?
Yeah.
What am I going to get for it? And what's
Right.
your exit strategy
Exactly.
for how I'm going to get out of it?
Okay.
Okay.
So that's all
the
a
stuff
part
that
of the underwriting.
does in the bank.
Okay.
So let me pause you for a second, and I'm gonna let you finish your story, but I want to make sure that folks are following along.
Okay.
So when you're using this sponsor, this high net worth person, you're using them for a temporary. You're using them to lure other investors into your portfolio, right? So you're going to them saying, hey, this person is a part of our team, right? He has this much money, or they have this much money. That's why you as an investor should join our team. But do they forever sponsor these deals, or is it just a temporary exchange of funds? Does that make sense?
So there isn't an exchange of funds.
Okay.
It's basically they come on. They're a part of your group or
Okay.
your team, right? And they're actually going to be like the lead of that group. So whoever is the sponsor for this particular, for our acquisition of Abbey Lake, which is the one we're talking about that we're getting to. He was the lead of the group.
Okay.
Right? So he is on the actual loan.
Okay.
He guarantees the loan. He brought his portfolio to the deal as well, and his experience for that particular project. So it's project specific as well.
Okay.
And also, so there's money that you have to actually put into the deal in the beginning as well. Sometimes they'll bring that money too. Okay. But we may bring that money as well.
Right.
And what else?
I think it's important to make clear though, you're not just leveraging them; they're getting something out of it.
Yes, and that was the question,
They're basically in the market for investing in deals anyway.
Yes.
So for someone to bring a deal to them, it's great.
It's great. Right, because I don't have to work for it.
I don't have to work for it.
Yeah.
If the numbers look good, this is an opportunity for me
I like,
to leverage my portfolio. I'm going to make money. There's management fees, asset fees, all fees that they're going to benefit from as part of the process. So
that's the kind of, I think, what I meant is like, so as a sponsor, it is, I'm obviously out here looking for things to invest my money in. You come along, you present me with a good opportunity. I join your team. And then so for this project, I'm on it. I'm going to make all of this money from all these fees because that's what I was looking to do anyway.
Right.
And this now becomes a part of my portfolio of things.
And that's what the group thing comes from. Everyone benefits.
Yes. Group economics. You know, what I find is that folks, and I'm going to let you finish because I want to hear how we get from 2 to 100 in the second 3 months. In 3 months. Yeah, because I'm trying to figure it out because the math ain't mathing for me. So I'm going to let you get there.
We're going to break it down.
But just as a thought, group economics is something that particularly Black people have a hard time with.
I know. Why is that?
I don't know. I mean,
the trust. People can't trust.
Yeah.
I mean,
It is trust.
It's the simple thing of
But
trust.
you know why? It's because we're not educated.
I suppose
We're
that
not
could be
informed.
a thing too. We're not informed.
If we take the time to educate ourselves
Yeah.
and understand the process, then the fear goes away.
Yeah,
That's true.
That is true.
That is
Before
very true.
starting Stream Chasers, Kaylin and I and a group of friends that we know and trust very well came together, and we have been discussing what our next step is going to be. We've since everybody's been having babies and things have happened, so
Yeah.
we've since put a pause on it for a second. But I truly believe that this group of people, because we have that trust at the base, are going to find the next thing for us at some point. So, but to that, it's a very limited group. It's a small group because of trust.
Exactly.
You know? Anyway, so continue on. So we had 2. We haven't got to 154 yet.
So we met at the conference. We came back from the conference. Nikki stalked him. We got a lunch date with him, and we came with a deal.
That was less than what he told us now. It was only 36 units, by the way.
Because, right, he told you to dream
Yeah, it
bigger.
was 36 units. Yeah, because we remember you were hesitant to take it because you were like, Nikki, this is not what he said.
I knew
And
it was
like,
under
I don't
100,
care.
but I didn't think it was that low. But in any
It was
case,
36.
we but it was such a
It was such a beefy
it was
good
a
deal.
perfect on the numbers worked out. It looked like on surface it was just like perfect.
Okay.
And he loved the underwriting. He loved the fact that we came prepared and had.
He couldn't believe it.
Had
He thought it was
done-
just a lunch date.
Oh yeah, no.
And he was in
More
his
than
seat.
just
He was
lunch.
like
Fidgety.
He was like, I can't believe you guys bought a deal. He's like looking at the numbers. He was like, oh yeah, this looks great. And then we'd talk a few minutes and he'd open it back up and he's like, oh yeah, this is just my kind of deal. He's like, I know it's under 100, but the numbers are just
Can't pass
so
it up.
perfect. So he's like, okay, this is what we're going to do. We're going to set up a tour, follow up and set up a tour. I'm going to come out with you, do the tour with you. You know, basically we're shadowing him at
Right.
this
It
point.
was written.
Which is
It was written at
It was
the
done.
Yeah.
I was like,
And we went there, and what we figured out was this was in Alexandria, near the Woodrow Wilson Bridge on the Huntington side. I'm not sure if you all are familiar, but they have done a lot of development over there, and it was an older building, but there was space around, open lots around it, and then some townhomes, and so. It was overpriced.
oh my God,
And
$4
it
million
was-
premium.
It was overpriced because they were looking at the potential for it after all of this development that was going to be done.
Right.
So basically, they wanted you to buy the whole block and tear down the townhomes that were there, and then build up the building either three
It
more
was a 3-far.
floors.
They had it rezoned as a 3-far.
Yeah. So
What's
Yeah,
the
what
play
is
for?
that?
Yeah, just so you can explain that for people.
Basically, the land that the building was on was worth more
Okay.
than the actual building itself. And so with the 3-far, you can either go up 3 levels,
Okay.
right? Or you can go across the lot by 6, I think. Six levels across the lot. I can't remember exactly, but it was basically you had to do something different than what was there.
It was
you
a development
You had to knock the
opportunity.
whole
Okay.
building down
Right,
and
right.
basically rebuild it, and that's not our strategy.
Oh, okay.
And so we walked away from that, but we earned a key principal sponsor because of the diligence and follow up and the underwriting expertise. And he knew that we were serious about what we were trying to do. And he's like, yeah, I'll bring you girls on board. You know, we can partner on future deals. Bring them to me and I'll sign on them. If the numbers are right, you know, we're in it.
Yeah.
So we were at lunch. We had gone to lunch after we did that visit. And he had mentioned in the conversation that he was working on another deal, right? And this was the deal that we actually came in on, the 152 units down in Thomasville, Georgia. And so I said to Pam when we met back up, I said, even though this deal isn't going to work, I'm going to ask him, that's what I do, if we can come in on this deal, you know.
why not?
Why not? What do we have to lose?
You already
Yes
seen
or no? Yeah.
Right.
And he said, really? You want, he couldn't even believe that we wanted to. And I was like, what do you, yes. So that's how we went from 2 to 154. Because sometimes you just have to jump out there.
Wow. And so he made you part of a deal he was already working on.
And we were able to come in and basically work as a sub syndicate. So we helped with the capital raise. And yeah, so 154, now we're in 301.
That's a great come up. That's a great.
That's another 148
So that's how
that we need to talk about.
142.
I'm keeping up.
Before the end of year one, that's how we were able to to get to 152. That's 154 by year one.
That is impressive. And it is a definite testament to doing the work, right? Mm-hmm. And then when the opportunity presents itself, because they will present themselves, that you are prepared. Mm-hmm. One thing that we learned last week or last couple weeks from Kim Profit, who was here, was like, education is a big thing. Like he was like, the first thing he does for all of his real estate clientele, because he's selling one-offs, are education. Like before we even start seeing houses, let's talk about what all these things mean. Yep. And so when you are prepared, the stars still align. And you will have opportunities. So now we went from 152 to 301, and I'm trying to make the math work. Okay, so I like it. Now my question is, when you come on board, you guys are representing other investors, people who have joined up with you. So by the time you did your 152 deal, how many other investors were you representing at that time?
Or does it change per project?
Oh. It does.
Project specific.
Oh, okay.
Very project specific. And so we, in the middle of all of that, we started a meetup.
Okay.
because we were always the double minority in the room.
Okay.
And we knew we were playing in a space that was male dominated, right? And we wanted to see more women in the space. We wanted to create the opportunity and show them that there were other women that we were able to do it. You know, we're just your average girls. You know, we figured out a way. Okay, well, since we've opened this door, let's come on and bring our sisters behind us. Okay. Right? And so I remember when I proposed the idea. Here we go.
Look at the rolling of the eyes.
Exactly.
Sounds nice. But why right now?
And I said it sounds like a great idea because I'm thinking things that generate revenue.
Okay.
Yeah.
This meant we were eventually. I'm thinking of things that generate revenue.
Okay.
And in the shorter term. And
I'm long term.
We need to be channeling our energy to those things that are bringing in.
Gonna make money right
exactly.
And I knew it required a lot of work. Right. Oh, no, it's fine. That was one conversation. I promise you, 2 days later, she had the whole thing set up. It launched.
Is this the meetup?
And people were signing up.
So you couldn't even say, but people have signed up now. So
because now you got to be committed.
Exactly.
She's like, but people, look at how many
people. They don't even know us. This is a sign. So sick of me.
And so what is the purpose of your meetups? Because I think we used the phrase a couple times, but what does it mean and what do you do with them?
So it is an opportunity for us to bring other women and Black women specifically along. But I mean, we're open to anyone. But specifically what we figured out when we first started in this business was it's heavily male dominated.
Yes.
And there's not enough people of color that are in the investment space. And we wanted to change that. Particularly in this area, after those national conferences we went to, we came back home and we wanted to be able to sit in a room and network with people like us from our space without having to get on a plane and fly somewhere.
Okay.
And at the time, there were no women sponsored meetups in the investment space.
Oh,
there were no multifamily.
Now everybody.
Then they started
I promise you, in 2 months, months, there were like 10.
Okay,
like
they watching.
Yeah,
how quickly.
But we always tell them they're watching. Do it anyway. Do it anyway.
And so the idea was for us to create a space for other women and minorities to learn what we had learned.
Okay.
And we don't know it all. We're still learning.
Okay.
And we're open about that.
Come along on the journey with us.
Okay.
And we'll as we learn, you can learn, and we'll share it as we go.
Okay. Sounds like somebody I know on a platform I know called Stream Chasers. There we go.
And we've built it organically over this time. And now we have a sponsorship with it now.
Okay.
And it's growing. It's growing organically. Right.
Yeah.
Now we're getting ready to put it on fast track.
Oh, okay. And what does that mean?
Yeah, what you mean? Like, yeah.
That was just something else.
She wanted to get a reaction out of me.
Okay.
I only raised the eyebrow.
Yes.
I ain't paying no attention.
Yes. And so what are the requirements to join your meetup and or join your investment? Like, how do I become a part of a project that you have going on?
There's no requirement to join the meetup.
Okay.
Anyone can join the meetup. We welcome men too.
I was about to say, because being transparent, when y'all first started, I remember when y'all, it was like a couple years ago, and Mickey went to the first couple of them, and I was like, I'm trying to go. She was like, women only. And I was like, but I'm trying to get in. And I remember I was at home blown, like, dang, like, I'm trying to get educated on this.
But we make it very clear that the men are welcome, because we understand that we can't really move around. You know, we need our kings, right?
Mm-hmm. Okay.
You know, we can't do that without our kings. No, seriously, because I mean, we have a mentor that's a man, right? So we understand that we can't move through the space alone, and we get that. So there's no requirement to really join. You can you have a Meetup account. You can log in. We've had a few crazies. We were like, maybe we do need to put some type of
some type of pre-screen.
But that's a little sidebar. So, oh my god. But anyway, so there's no requirement for that. But with the investors, you do have to kind of sign up for our database. Okay. We do need to have some type of conversation with you to figure out what your goals are. You know, what do you want to do, so we can figure out if our goals are aligned. Right. What returns are you looking for? What have you invested in before? What knowledge do you have? And that's me.
That's what you do. I could see that.
So as a first time investor or someone who's interested in investing that has no experience or no portfolio, what do they need to come to the table with? And I know it's project based. So say if you have a multi-unit,
because they don't do small no more. So it's
not
going to be 36 units.
That's not true.
That is not true, in the sense that that's what Daniel's requirement is. But we have several key sponsors at this point with different investing criteria.
Got it.
And so if you want to be able to have several, because some will want to operate in that smaller space and won't have any problem with it. Some will want to be, now I think Daniel's now up to 300 and 400 units.
Yeah, he's getting ready to go into something major.
He's going even higher.
Yeah,
and so you want to be able to have them in several investment thresholds to meet your needs, so that you can always have.
So you can move them around as you need to. Okay.
Yeah.
But your first time investor, you really just need to have a little bit of knowledge in what it is you're trying to do. And then we can guide you through the rest of it, right? Figuring out how much money do you even have to invest. Because don't put your last $10,000 in this deal. No, seriously. Yeah. Because if that's what you're doing, then you shouldn't be investing yet. You're not ready.
Yeah.
Because I want you to be able to sleep, and I want to be able to sleep. Because there is risk involved.
Yeah. Anytime it's investing.
And there's hold involved. So if you feel like you're going to want your money back in 2 months,
this isn't the place.
This is a long game.
But that's part of your underwriting, where you kind of lay out the exit strategy. Like, we might hold this for 10 years or 15 years. Is it okay?
Not 10 or 15.
Okay, not that long.
5 to 7. Okay. But with the pandemic, we've put in a buffer. Because, you know, you need to have space for ups and downs or what have you. But they're typically, with the syndication, it's a 5 to 7 year hold. It's a minimum of 25. Some of the deals that we see,
25,000,
25K. But most of the deals that we've been seeing is about 50. And when you come into the project, it's typically a 70-30 split, where 70% ownership goes to the limited partner. So I'm breaking down how it's broken down. And then 30% goes to, with the limited partner, is a passive investor. That's the investor that's bringing the capital to the deal, right? So you're infusing the capital into the deal. And then there's a general partnership, which is the GP. They're the owners of the deal. They're the ones going to source the deal, fund the deal, find the deal, manage the day-to-day. Like, they're the active investors.
You all,
that's
right?
us. Exactly. So we have 30% of the pie. And then there's a 7% preferred return that you actually get off of the project, which is basically paid in dividends that are quarterly. But we typically will try to double that money within that 5 to 7 year hold by the time that you're done with the project. That's normally, that's a quick and dirty.
Yeah.
And that's a generic kind of usual scenario. But in this game, you can pretty much structure your deals how you want. Based on
80-20.
Based on, you know, the investors that you have in your network and what they can tolerate, what their risk tolerance is, and what their expectations are.
Okay.
And because it's a 5 to 7 year, or sometimes 10 year, right? I've seen 10 year projections. I was like, ooh, you know, we hadn't seen those before. We like to tell people your money is illiquid. You know, coming to knowing that it's going to sit. This is a longer play. Yeah. Right?
Yeah. Is there ever, is there a limit to the number of investors that you all will allow in a deal? Because, like, say if you got 100 people that's trying to put up $25K, but you don't want your slice to be that small or whatever. So do you all cap it off ever? Like the number of investors that can get in on a deal?
It's project specific as well.
It is. The last one that we were in, well, the very first one, I like to talk about Abby Lake. That's our little baby. You know, that's put us on the map. We had 65 investors that came into that project. But there is a limit depending on what type of offering it is, because there's a 506B. These are the regulations for the offerings. There's a 506B, which we like to call for your buddies. That's like your inner sphere. That's your family, your friends that you can invite. But you have to have a substantive relationship with them that you can prove that you've known them. You know, right? Because these are offerings that are being sold. They're private placements, right? They're not being sold on the stock market.
Got it.
So there are regulations that you have to follow that the SEC has put in place. So you could have 35, if I'm not mistaken, sophisticated investors or non-accredited investors. And so accredited investors, you basically have a net worth of $1 million or more combined with your spouse, you or your spouse, or you have earned $250K for that particular year and the previous 2 years, or $300K with your spouse combined. That's an accredited investor, and the non-accredited is us.
Okay.
Right. You just basically have to be educated a bit, a sophisticated investor. 35 are allowed on the 506Bs.
Okay.
With your 506Cs, those are basically open offerings that you can send out to only accredited investors. Though. Right.
Okay. Gotcha.
So you can do like mass mailings with those. But with the 506Bs, those are much more regulated and they're more private.
Okay.
Gotcha.
Interesting. So let me see if I can recap for the folks.
Okay.
So you have your 20, if you're an investor, if you're coming to Paragon Investment Partners and I have my 25K, I've educated myself, I've done all the things, right? So I want to invest in this property. I have to be prepared to let that 25K go for 5 to 7 years, depending on the project that you're doing. And then I'm going to get a quarterly dividend, like the 25 cents that my bank gives me every quarter, right? That says, thank you for letting us use your money. It's going to be more than 25 cents, but that's what the bank be giving me. Like, here you go.
And this is why you want to do something different.
But this is why you want to do something different. So you get your quarterly dividends paid out like just we pay out on Stream Chasers, your quarterly dividends, for the folks, just to see something, to see what your money is doing and or not doing in that 5 to 7 years. And then at the end, hopefully I get my money back plus something.
I hope.
Well, I mean, now I want my money back plus something, but you know, it's the market. Things happen, so you know there is a slight bit of a risk. Yes, exactly. Okay, so there you go. Yeah. That's the quick and dirty.
That's just mailbox money, we like to call it.
Exactly, and that's where we encourage folks to get to, because you know, entrepreneurs, as you all both know, there's a lot of brain space involved. You're running this business, you're doing that, and there's only so much you can do with your brain and your two hands. So you want to be able to put your money somewhere where your money can make money, passive investing while I'm sleeping, because I don't have time to manage every
it's a commodity.
stream.
Your money's not doing anything for you if it's not moving.
Exactly.
It needs to move.
Exactly. We encourage that a lot.
So I have a question back at the very beginning. So when you all said, you know, you started to put out the money to build out the team in the beginning, I think you said you hired a SEC lawyer or attorney, I think, to be a part of your team. So like building out your team, are they like employees or contractors for Paragon, or are they like equitable partners, you know, at like your level? Like, well, how did that work, or that process? Because a lot of times, a lot of people hear the term grow a team or build a team, but it's like, how did you?
It's basically identifying who you need on your team. So, you know, if you have properties, you obviously want property managers, but you don't want to have to be doing it yourself. And the attorneys, like we met Kim and we had a conversation with her, and there were things that she was selling in order to help us educate ourselves on how to operate in the syndication space. And so I can't remember, we bought into a marketing plan. It was like 6 months or something, so many sessions. And then after that, you know, we have the education we need to go out and do the work. We can leverage her by saying, you know, you know, this is the attorney that we're working with on our team. She's a syndication attorney. When a deal comes about that requires private placement memorandum, we can retain her to do our work, and we're being, you know, guided and educated by her. We hired a business attorney that specialized in real estate out of Annapolis. And so we basically had a conversation. They came to us by referral from somebody from a boot camp or something we attended. We interviewed him. He told us what he did, you know, how he moved in the space. He was a former, or he was a investor as well. And so it's basically interviewing people to understand that you have like interests and you're aligned on what your expectations are from them, and telling them, you know, basically, or asking them, would they be interested in being a part of your team? And so that, you know, when things come up, we need contracts written or whatever, we can go to Brian and say, you know, obviously we're paying legal fees. It's not like, you know.
So it's hired services.
It's hired services, but it's people you know and trust that you can, you know, you leverage their name, their business, but you have established a partnership with them in that they know what you're doing, what your goals are, what, you know.
And you're aligned.
That relationship is important. I think.
And so some of it is retained and some of it is not. It's more on relationship building. Right. And, you know,
relationships are super important. Because when you spoke about Kim being the one who introduced you to your mentor, I was thinking to myself, that's key, right? Like, you don't meet him without her. So paying that money up front definitely had its dividends on the backside. But like at my full-time job, I'm the gatekeeper to how DCPS spends money, right? Like, I don't usually select the vendors that we spend money with, but I am the gatekeeper to the people who will select the vendors. So building those relationships are important so that when something comes up that's in your lane, I remember your name and connect you. Otherwise, I don't know what you're talking about. I pretend like these people don't exist. You know what I mean? So if you come to me and you're not prepared, you look foolish, I don't know nothing about what you're talking about. Right. But if you come, you've got your things together, then let me make a connection that's going to help further you.
Exactly.
I like it.
Exactly. And that's what we've really built our business on. Yeah. For sure.
Great relationships.
Like even with our commercial lender, who I stalked as well. She'll tell you.
Okay. And is that what Eastern Savings?
Needed. No, this is with Greystar.
Okay.
Greystone.
Greystar. I'm known for mixing up.
It's still a great relationship.
Yeah, I'm known for it. She'll get me every time. She'll get me like Nikki.
She'll turn a name around in the middle.
So don't mind me. It's Greystone, Alicia. I'm sorry.
So, and is commercial lending different than what you were doing with your duplex? I'm sure it is.
Very much different. That's what she's talking about. You have to have the portfolio, the experience. You have to have played in that market before. You can have to be able to guarantee that loan. The actual project that you're going into, you have to have something that's comparable, or if not the same. You know, and that's where the resume comes in.
Got it. Yeah. See, all the stars are aligning for me. I get it. That's what makes sense.
So we went. Let me tell you about this.
Okay.
We went to an event, because we knew we needed a commercial lender.
Okay.
So we saw she was presenting, and I did my research. I'm very big on doing my research before I go somewhere. And I read up on her bio, and I was like, we need her. So we went there, and while she was presenting, I was like, okay, I'm going to start taking down. And again, you have to be able to connect with people.
And you didn't know her prior to that, right? Okay.
No, just knew some personal things that we could connect on. That's all you need.
Right.
And we started the conversation and went from there. But again, we were prepared. We had our book. We knew what we wanted to do. We knew what space we were going to play in. And she saw potential, you know, in us, and decided to give us a chance. And she's been with us. We just went to lunch with her not too long ago. She's great.
That's where that partnership comes in handy, because like you said, you have that talkative, like, hey, I'm gonna shoot my shot, and then, you know, Pam is, I'm examining everything.
I'm sizing everything.
Before I just go out there.
Connecting the pieces on
you
the
miss
back
100% of the shots that you don't take.
Yeah, that's what MJ says. That's MJ's quote.
Yeah, I'm not shooting the shots though. I hear it. I know what it means, but I'm definitely Pam in the back. Like, I'm gonna go and write these numbers up, and I'm gonna get you prepared. Go ahead. Do what you do.
Then you be nice if you get the win.
Oh man, I back my husband in that way. I let him take the shots, and I'm just going. I'm gonna write the things. It's okay. It's cool.
Yeah.
You need the partner. You need the balance.
No, you do.
Yeah.
You do. So earlier you mentioned, how you have like the passive investors. Those are the people that just want to put the money up and sit back and let the money do what it does.
Mm-hmm.
And the reverse of that is active.
I
guess.
Yeah.
So like those. So like what is the active investor's role in that? Because like you said, everybody's assigned to a role because you all are the GPs. I think you said the one who's finding and sourcing the deals. Then you have the passive investors who sit back. So what do the other active investors do if you all are doing the bulk of the work, like the real work of finding all the deals?
What other active investors?
So you said you have passive investors and active investors. You said passive investors are like the 70 or the rest of the percentage.
Right.
You said you all being the GPs take 30%.
Right.
Right. So are there any other active investors that are part of these deals? In the
GP.
In the
general partnership.
Yeah.
So there's several ways. You want to break that down?
There's asset management. There's capital raisers, those that are sourcing the deals. There's investor relation. Once the deal becomes live and is signed on, there are monthly reports that are generated to show the activity of the asset and how it's performing. There's capital improvements that need to happen, and so there's if you're repositioning the property, which is kind of the space we're in, which is buying something that needs to be upgraded or improved in order to bring value so that you can raise the rents. There's always going to be a construction element to it because you're replacing cabinets or countertops and things like, cosmetic kinds of things. So there's a construction management part to it. And then there's reporting those things back to the to the passive investors. And so there's an investor relations part of it, whereas you're having to generate reports to them and explain to them what's going on. If something happens, God forbid, like COVID, and it impacts occupancy or the money that's coming in, you're going to have to be able to explain to them what's going on, why their returns might be a little less than what they were before. So it's all of that is covered under the GP.
So you do all of that.
Well, there's a
team of us.
So that's what I didn't know, because at first when you said GP, I was like, wow, so it's only you two?
No, it's a team of people.
Okay. I was about to say, because I got very tired.
And you play different roles in it, right? You can come into it in multiple fashions. So you can be a guarantor on the line. Of the loan. You can be the signatory on the loan as well.
That's the sponsorship.
Okay, right.
The key principle. And then you source the deal, or you secure the financing, right? We were talking about building a relationship with the lender, and you need to do all of that. The due diligence that's required on the project. Those are all things that have to be done ahead that you would typically do if you were doing your own deal on your own. You would do that. You would source the deal. You would do your due diligence. You would get you would secure your financing, and then you would collect your profits and stuff on your own. Well, in this space, we share those responsibilities and we share
and you got
the money.
People who are good at it.
Okay,
exactly.
Right. So, is there ever a time that you witnessed, whether it be yourself or heard a story, where people started to feel slighted because they're not included on some of the deals? Because like you said, you had the one sponsor, that gave you a opportunity. But then, like you said, you want to build your portfolio, and he might be 100 and greater, but then there might be another sponsor that's great for 25 and less. And it's like, well, like Nikki, let's align ourselves with him. But then that other sponsor is starting to see, like, oh, they don't even include me on that stuff.
It's too many opportunities.
It's too many.
So many opportunities.
So that's good.
And we operate in an abundant space. We've come across people that have a scarcity mentality, and they try to hoard information and try to keep you out of things.
Right.
But that's all industry. Why is that?
And we don't operate in that, and we try not to. When we see that and see that's how you're moving,
you're not for us.
We don't operate.
We've done it.
It's too much. much. It's too many opportunities out here for people to participate and to make money and deals. It's just not necessary.
Yeah, people have like a fear of missing out. Like I mean, and Mike spoke on that on the mobile detailing. It's like, you think you sharing one thing with me is going to mess up all your money.
It's not.
We believe that what's for us is going to be for us, and there's nothing you're going to be able to do to change that, and vice versa. So there's enough for everybody.
Good. That's good, because I was definitely thinking that when you said like you have these different key positions on these teams, on these partnership teams. But it's like I said, I could easily see that being an issue among the Black communities, especially because people don't like to be left out. And it's like, oh, they did this one deal with me, but now they found another a bank person.
Let's just say that they're not the only ones, because we've run into some others.
Okay.
Okay.
We quickly diverted.
So we at 152.
Oh, okay.
Time to get to 301. Okay.
So I love it because math don't add up.
Yeah, I'm mathing over here. Okay, I'm keeping track.
So we did the syndication, and what was that? Was that 2018 or 19? 18, right?
It was. We closed in the early 19, but the deal was in essence done before we went into the holidays of 2018.
Okay.
We had a close date of early 2019.
That's right. Okay. So then in 2020, we came right back and we worked with our mentor again. Okay. This is another deal in South Carolina for 146 units that we syndicated. This was right at the top of COVID, as a matter of fact. Okay. And it was It was funny because it was an opportunity that we were working on before that, which was a missed opportunity. It was a really big, nice deal down in Texas.
Student housing.
Oh my gosh.
Oh. Big deal.
It was a great deal. But again, we believe what's for us
was for
us.
you.
That wasn't for us. And we had investors that were lined up to go into the deal. It didn't pan out. We had to come out that one and go into this one. Okay. But we were so grateful and thankful that they trusted us enough to come right on over with the next deal that we rolled into. So we went to 146 units in Columbia, South Carolina. And now we have another unit. We kind of parlayed into another
because
space.
Of COVID.
Crisis presents opportunity.
It does. Yeah. It does.
You know, you have to be ready though to move. If you're positioned properly. And go ahead.
What we figured out in going into COVID was, you know, the economy started tanking and people, these large investment institutions were trying to find places to park people's money. And so they were beating us out because they were willing to pay beyond what the properties were really worth. Okay. Right. In order to just be able to put people's money somewhere.
And get like 4%.
And they didn't care. They didn't care that the returns were maximized. They just needed a safe place.
Got it. Okay.
And so we figured out early on, you know, March, April of last year, that of 2020, that we can't compete in this space. But that's not the end all to be all. So
exactly.
We just
because we believe in multiple strategies and diversifying our portfolio.
Okay.
So we decided, we've been talking about this short-term rental space for some time, and we're like, maybe it's time.
Okay.
You know, people aren't traveling, right?
Yeah.
But they were traveling to Atlanta.
Yeah, because Atlanta was wide open.
Wide open.
Atlanta only closed for 2 weeks. If I recall.
Yeah.
Right?
Yeah, and they was back open.
And they were back open.
In the clubs, right.
And everything.
I saw that.
And you know, when people start running the other way, you start going the opposite direction. So that's what we did. We were like, okay, so everybody's kind of exiting out the space. It's going to be kind of cheap to get into it.
Exactly.
Now, hacking at it.
Yeah.
But you got to be prepared, because otherwise it's an opportunity you see and it's just going to keep going.
Exactly. And so we launched our short-term rental down in Atlanta. So we have a 1-bedroom, 1-bath down in Atlanta that has been going really well.
So are these things you doing like Airbnb, or like how do you?
We like to call it corporate rentals.
Okay, corporate rentals. Got it. Okay.
You know the jargon, it matters.
It does matter. It does.
And it's marketed on multiple platforms.
Exactly.
Okay.
For business professionals and for vacationers.
Got it. Okay.
And it's in Midtown Atlanta, so
and that's where it's at, ain't it?
Great.
That's where it's at. That's where everything be at down there.
Yes.
In the heart of everything.
Exactly.
It's easy to get to Buckhead and other places.
And so now we're looking to open more.
So with the short-term rentals, do you still use the larger group, like the team, or are those things that you can just do yourself?
It's just Paragon.
Oh yeah.
We actually have launched Paragon Suites.
Yes.
Oh.
And it'll be, in other cities.
Oh yeah.
The DMV area.
Coming soon.
Right.
We'll expand in
like
Atlanta
it.
and we'll.
I like that because you said corporate rentals earlier. I
Yes.
like that.
It's
Paragon
Sweet.
Paragon.
Yeah.
Sweet.
Okay. I like that. I like it a lot.
I like that.
Well, we're big on making sure that branding is important.
Yes.
Branding is important.
It
So
is.
if you notice, we're sitting
Yes.
here, and our meetup is Paragon Investment Partners. What
Paragon Partners with women into
multifamily investors. Yes.
She
I'm gonna
birthed
butcher.
it. She birthed it, but she can't remember that.
It's her thing.
Make sure it says Paragon. That's all.
Yeah, that's what matters.
Right.
So that's how, and that's what we want to do with anything we're doing. We want to have Paragon associated with it.
Okay.
And the other piece that we did when we were building, we took the time to make sure that we built our infrastructure properly as well. That was important because if your infrastructure isn't set up properly, then everything else is going to fold around it, right?
Yeah.
So we built our website. We took the time to build business credit. Have y'all had a conversation about that yet?
We have
Not
not.
You need to.
If you know somebody, let us know.
Yeah.
Well, let me know because I'll be ready.
Okay. There it is. Yeah.
We'll
I'm
have you back.
serious. Like there's no. I mean, I
Like we're gonna do a whole
We are.
education system around.
Because just
Like-
in the 3 years that I think we almost up to like 100K in business credit. That's hard to do, and people don't understand.
And this is with trade lines and
that's separate from you.
Yeah.
That's important.
Yeah.
Right.
It's
Right.
established through the business. You don't want.
you don't have to guarantee
Yeah.
it.
Yeah.
No. All of that.
Yeah.
So that's the other thing that we did. So we took the time to build that as well because again, you need access to capital to play in this space.
Yeah.
We don't want to use up all our capital.
Yeah.
Right.
I don't believe in that.
Yeah.
Not at all. You don't have to.
Okay.
Right? And so the beauty of business credit is it's not based on your income, right? It's
Okay.
based on your ability to pay.
Yeah.
So there's no top. There's no
Right.
ceiling to that.
Oh, yeah.
Right.
So whatever you can pay, you can get.
Okay.
So, but you have to have things established properly to do it too.
Okay.
Right?
And it's an education
Yeah.
because we've been educating banks and creditors along the way. Because as we
educating the banks.
Yes.
banks and creditors, because when we go to open up bank accounts or credit cards or trade lines, we are specific to ask, is this going to be reported on the business side or the personal side? And they don't know the answer. We've stumped every single everybody.
Well, I'm not sure.
I'm not sure.
What
I
you
have to
mean?
get back to you.
Yeah.
Like what?
No.
Like they assume personal everything. Oh yeah, we report to Experian, Transient.
No.
Yeah,
That's
no,
not.
that's
what we're
not
talking
business.
about.
Yeah.
We're talking about business credit. Oh well, I don't really know. No one's ever asked me that before,
Oh.
and so we'll have to get back to you.
Interesting. So we will definitely. It's funny because we were slated to have a segment on finance, on business finance, and we kind of diverted and did some things. So we'll come back to that. We definitely will.
We need to educate the community on that.
Yeah.
Back to talk about that.
So as the principal owners of Paragon Investment Partners, do you I know that the GP gets a 30% slice of the pie that you are kind of splitting up among all the investing parties under the GP, but how do you guys also get fees, or is it just whatever percentage comes back on the properties that you have?
It depends on what role you're playing.
Oh.
And it's deal specific.
Okay.
So however it's structured, if we source the deal, we'd get.
Oh, there's a fee for that. Okay.
Yes.
Right.
If you're handling the construction management, or you have a team that you're working with that's doing that,
okay,
you're benefiting off of that. If you're capital raising, however much capital network you're bringing, there's a return on that. So it all depends on what your role is.
I see.
How much you contribute is how much you
Look at
can
that.
earn.
And then at the end.
At the end.
That's where the big payout comes.
Okay.
When the project is offloaded.
When the project is done.
Yeah.
That accountant is busy.
Yeah.
That
do you
business
have you got an accountant on payroll, or you do that just because I need somebody to do the math for me?
We have accountants too.
Okay, that's on my team. I need an accountant because
that's important.
I'm trying to keep up with the math and I'm just having a hard time. Okay.
Yeah, that's a lot.
Yeah. And bookkeeping and all that. I can't imagine trying to, because I guess as an entrepreneur and I call myself a pretty intelligent person, I oftentimes overburden myself with more roles than I need to. And like the thought that this is divvied up among many players, because you ever been in a group project in school?
But you're only really managing your portion of it.
Your portion, right. I guess
Unless it's your deal.
Unless it's your deal, and then it's different.
And then that's part of the asset management.
Okay, I see.
Like all those administrative fees. With lawyers and the syndication attorney, because that's like $15 to $19K just for them to draw those papers up.
Wow.
Or 25.
Or 25, depending on how big the deal is and how many investors are involved. Because they have to generate a private placement memorandum for every investor group that's in the deal. Okay. And you're not coming in as an individual, you're coming in under an entity.
Yeah.
And so they have to manage all of that. And so that's why there's a special attorney specifically
for that,
associated with that. And so there's a whole laundry list of administrative fees that fall under that asset management category, which is why there's an earning potential on it. Okay. Because it takes a lot to
manage all of that. Yeah, I guess, again, back to group economics and trust, right? And educating thyself. As I find myself being educated on this topic, you know how you you were in high school, you had a group project and people don't be taking up their part of the project. And so you find yourself doing all the parts of the project. Right. That's the mentality I keep coming back to. Like, somebody ain't going to hold up their end of the end of the deal. But at the end of the day, these are other people who want to have their investment, so they're going to do what they need to do to maintain it.
And they are going to want their investors to reinvest with them on something else. So it's in your best interest to manage yourself accordingly.
Got it. That makes sense.
Because your credibility is on the line.
Is on the line as well. Exactly. When everybody has a shared interest, then people kind of hold up, right?
Yeah.
Okay.
Yeah. But just to talk about, I wanted to just put this in here real quick because it's important to say. Okay. You know, when we talked about the meetup and why we created it and networking and relationship building and partnering and we did a podcast interview with a young lady that we were introduced to through a meetup. It was a national event that we went to that we met her at. It was Michael Blanc's event, if I'm not mistaken. And she remembered us just from talking to us, you know, and she introduced us and we did this interview. She is now, when we talked to her about investing in multifamily, she got so excited and revved up, and we got her positioned so that she was ready. We actually didn't have a deal for her to work on, but she found another deal. Okay. And now she's a hotel owner.
Oh, wow.
No, she's a hotel owner. Yes, which is
it's another group economic investment space.
Yeah. It's the same type of thing now.
Okay.
It's the same type
that's
of
way
thing.
more than 5 units.
Yes.
Yeah.
And definitely.
Yeah.
So from that connection and that opportunity, she introduced us to another dynamic duo. That the duo that she's actually partnered with to invest in the hotel group. And we're going to talk to them now about another opportunity that we're traveling down to Georgia on, which is a development opportunity. Just from spaces that
it's Black investors buying up a community in Brunswick, Georgia.
I think I heard about this story
on the beachfront area. Yes, and it's basically the same thing.
Yeah,
group economics.
Yes,
buying up a community. And she's already on her way, but there's other opportunities to expand. And so we're going down there on Wednesday.
Okay.
To evaluate the opportunity for ourselves and how we can become a part of it and partner with her.
And bring other people in it.
Yes.
So I've heard you. Oh, go ahead.
No, go ahead.
I'm gonna say, I've heard you mention several different spaces when it comes to this. So I've heard you say development space. Now there's a hotel space. Yours was you got short-term. There were short-term rentals, corporate rentals, and then there's obviously the multifamily units. Are there any other spaces that I should know about?
Oh, I'm sure there are, but those are the ones we're in.
Those are the spaces that you're in. That's woo.
That's a lot of opportunity out there.
I see.
It really is.
But so real quick, I just had a question. So how you said you're going down to Georgia to potentially, to vet the opportunity yourselves to see if it's something that you all like. How can you all get involved in that investment? How you said earlier, yours to get involved, it's at least minimum $25K. Is that like the standard across the different investment companies out here? So like, could that person or this woman easily be like, nah, her standard is like 40, 50K? Or do you typically see like 25 as the standard, and can the investment partners make their own limit? Or like I said, is that really consistent?
When we first started, the standard, we consistently saw 25. Okay. And then we, obviously, the more units, and it's deal specific, but the more units, it tends to be a higher number, like 50K.
Yeah.
Depending on the structure of the fund or the syndication will determine what your entry point is. Okay. Like whether it's a 503C or a B, or that really can dictate what your entry investment threshold is.
Got it.
Yeah.
Okay.
Because with the accredited projects, they're typically a little higher.
Got it. Because these are sophisticated. Yes. Look at me. I got jargon, okay? Yeah. I got lingo. I'm learning
net
things.
Worth individuals that are coming into those projects.
Okay.
So they have the money.
And you can, that's the minimum. They can come in at 100K, 500K, 300K.
Whatever.
Okay.
Yeah.
I'm not on that side. I'm on the non-accredited side, okay? So that's what I'm going to start looking for. All right?
All good.
Okay.
We have to start somewhere.
Exactly.
You got to start.
500K, Jesus bless. That's money to play with. You know what I mean? Like that's what you think. That's their play with money, because this is risk.
It's really some wealthy people out here.
Yeah,
who just got money.
Yeah, and but when you get to that space, I think when you get to the space where you have 500K to play with, these are the types of things that you are always looking to have your money make money. I think the thing that folks who don't have that kind of money yet forget is that we're always working very hard to get our money, and then we keep it, right? You store it in the mattress, you put it in, or you put it in a regular checking, or a checking account, but you're not thinking about how your money can make money, because you're always thinking about how you can make money, but there's only so many hours in the day. Yeah. Yep. Oh my goodness, I have learned so much. My brain is like, I feel like I just took a class. Like, oh my goodness.
This was good.
It was.
Yeah. So I know you have the short-term rentals that's getting ready to, already starting, but you focusing on that. What else is next outside of that? Next for you all and Paragon, or it might be something else, because the name of the show is Stream Chasers.
So we really are like one of our what do you call it? Bucket list investments. What is development projects?
Okay.
So we're really excited about the opportunity in Brunswick, Georgia, and if not that one, something in the development space. So even if it's in the DMV area, we do have other partners that are doing development projects in DC. Okay. And so we're, in constant, interaction with them about which deals we can come in on with them as well. So that's a space that is really exciting for us.
And that's development is ground up, right?
Ground up.
Okay.
Nice.
That's what I thought. Just want to make sure.
That is. And a longer hold process, obviously.
Because it takes time.
Right. And so for the people who are interested in joining like the meetup, like what's the logistics on that? Like how often do you all meet? Where can they meet you at? And how can they get in contact for that? And now it's open to men, everybody.
Meetup.com is the name of the website. And you have to basically sign up for an account with them to join. A lot of people don't like that, but you have to do that. That's how you come onto the platform. And then you just look for our group. Paragon Partners with Women Multifamily Investors is the name of the group.
Good job, Nikki.
And then you just sign up, you know. We typically do it monthly. We're actually presenting this month. So you guys need to join in.
And what's the
schedule for
What's going to be the topic?
We're talking about this.
Okay.
Passive investing, active investing, how you can actually become involved. We have something we're going to launch as well, so you need to tune in.
Okay. Is it the 3rd or the 4th?
So we
still are operating multiple businesses and employment. So we try to keep to the 3rd Thursday of the month. Sometimes it falls on the 4th. It just all depends.
It depends on how many weeks is actually in the month, basically. But it's a monthly meetup that we host. And anyone's welcome to come. And it's virtual right now, too. Yeah,
it's been virtual since the pandemic, and we're just kind of gauging how things open up to determine when we started out in person. And so our goal is obviously to go back to in person, but we've been able to reach people, you know, California, Ohio, many more people.
And that's the positive with the virtual world.
Yeah, it is.
So I guess once we go back into in person, we're gonna have to figure out how to broadcast.
Oh, no.
Look at that! Look at her baby taking life. Look at it, just taking flight.
No, this is what you want. Don't be scared.
See, I'm scared of angles though when we're live. You know,
you like get my good side. Okay,
hold on, y'all.
Exactly.
Right.
And as I hear you say, you guys are operating multiple businesses. Can I be nosy and ask about those?
Sure.
Okay.
I have 2 HR consulting businesses.
Okay.
One is
serial entrepreneurs.
One is 7 years old. And I'm kind of the sole member and operator, which
she's so modest.
It's getting to be getting to be a lot.
Okay.
But last July I partnered with 2 Black women that I used to work with when I worked in businesses. And one is an employment attorney and the other is an HR practitioner like myself. We all worked for the same company, and then we branched out and started our own practices. And we kept coming back to opportunities that were too big for us as sole proprietors to do. And so we launched Go Live HR in July of last year, and we landed a contract with the Food and Drug Administration in October to do an EEO audit. So we got our first government contract.
Come on.
And so those are kind of my two big asides from Paragon Investment Partners. So we have Paragon Investment Partners, we have Paragon Suites that's now live and been live since last August.
Yes.
PFD Business Solutions is my HR sole business, and then Go Live HR is the other business. And I have another nonprofit that's kind of stagnant right now, but it's about to jump off again.
Okay.
Yes. Come on. We won't talk about that right
Multiple
now.
streams of income.
Right?
Yes.
So we'll be coming back to that.
Okay.
Yeah. I'm still a 9-to-5er.
Okay.
So I work down at the Department of State.
Okay.
So I'm in between that, but I'm trying to transition out of there.
Come on, I know.
Oh my goodness, I'm trying. And then I have a nonprofit that actually both Pam and I sit on the board for. It's a Fire League organization, which is a youth sports organization that we started, 2013? Yeah, as a sole proprietorship, and now we're 501c3.
Okay,
doing really well with it, but we're out of hiatus now.
Right,
we were in hiatus a bit ago, but we have a girls team now that's actually beginning to play under the org. We formed it for my son, so that he would have an opportunity. He wasn't getting all the chances that we thought he should have been.
Okay,
there's a lot of politics in this area.
Exactly. So we're like, no worries.
When it comes to those
she said,
sports,
"Don't worry about it. I got it.
We're gonna create this thing on our own."
Exactly. Don't worry about
Make your own table, right?
Exactly.
And so that's what we did. So, and that's going well. But I've kind of taken a backseat so that we could birth these babies over here.
Yes, yes. We just.
I mean, those we have passion projects, but then we also have our ultimate goal is building generational wealth. And while these passion projects are good and we serve the community and we help, we can help you so many more people with finances and generational wealth than we can,
That's sports. What I said. Come on. We always talk about it. We were talking about how, like, my daughter, I would say the one blessing about it is, like, when I grew up, college was not an option. Like my father talked about it from the beginning, like you must go. But I want us to get to the point where you have generational wealth where college is optional. Do you want to go? Because you really don't have to go, because you can just work for my company. You can just do these things. You know what I mean?
Yeah.
I love it. And we just had a segment on winning government contracts. So congratulations to Go Live. Right. Yes, I am excited. Yes, many things.
Yeah. Yeah, y'all doing the thing.
Yeah,
y'all doing the thing.
I feel like I did all the things. Now I'm tired, but very good. I'm happy to hear it.
Yeah,
well, we thank you guys for coming in and sharing with us. We're hopeful that Stream Chasers, you'll see some Stream Chasers on your on your meetups. You say, how did you come by us? And they'll be like, Stream Chasers. I'll be excited. I will definitely be on the meetup, so that'll be that.
It's right in. Well, when they get back to doing them in person, it's right around your way, not too far.
Oh, okay.
Down at the harbor.
Oh, okay. Yeah, I'm in Fort Washington. So
me too.
Yes. I cannot wait. I'm excited.
Awesome.
Yeah. All right.
Thank you for having us.
Yes.
This has been fun.
Not a problem. Not a problem.
We have a website too.
Oh, okay. Go ahead.
I
Toss it on.
Forgot. You know me. Paragonpartner.com. And then we're on social media. It's Paragon Partner is our handle for. Look, and I have to look to her. What is our handle?
For which one?
For Instagram.
Oh, Paragon Partner.
Paragon Partner. And then I don't know Twitter.
It's fine.
Okay, it's fine. So
it's so limited. I mean, you know.
But the biggest thing is ParagonPartner.com. You can find us there, and we're on Facebook as well. That one is
Paragon Investment Partners.
Yeah, Paragon Investment Partners. We're not as active on Facebook, but you still can find us there.
We are.
If you need to get in contact with them, that's where it's at.
We're active on Facebook and on Instagram. We don't have a group.
Okay.
It takes a lot. It takes a lot to drive a group.
It does.
And with 5 businesses, like, come on. I mean,
it's like something else got to be automated first before you start
on now,
another initiative.
We have to channel our energy and our resources to things that are generating revenue.
You're like, is that Facebook group?
Bring it up, right?
Yeah, and it's not
like
quickly shut down.
No, I was like, you go right ahead.
Yeah, and it's not like you guys are selling product.
Yeah, right.
Right. If you were selling product, then social media would be your thing. But it's like, if I'm not selling product, I don't need to reach masses all the time. I agree. Don't worry about it.
We're going to be selling product.
Oh, okay. That's next. Okay. Okay. But when you start selling your product, then you get you a social media manager so that you can get out there to the people.
All in the works.
All in the works. Did you hear what she said?
She'll support me on that. That's revenue.
Because it's revenue. Exactly.
To make money, you got time for it.
Exactly. All right. I'm not mad at it. Stream Chasers, you can find this on your Apple iTunes, your Google Podcasts, your Spotify, YouTube, so you can watch it all the places. www.streamchasers.work, because Stream Chasers do the work.
Yep.
And with that,
just got paid.
there it is.